Thank you for joining iMeet. When you hear the tone, you will be the 21st person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk, and today we're going to quickly review the last couple of days, try to figure out what the market's going to do over the next couple of days. And today we're going to look at the different indexes. We're going to talk about some support levels and pivot points that are actually beginning to come into play. And we're also going to go over some of the sentiment indicators that we follow to see whether the market participants are a little bit too bullish. And lastly, we're going to take a look at all the sectors, because there's a couple of them that, despite the pull-off, the pullback in here, actually look like the places that you want to put some money to work at. They're defensive sectors, but you'll be surprised at what the charts look like on them. So basically, last week, just to get rolling here, Dow Jones snapped a 2-week losing streak. Just about every index was able to punch a new record high. However, what we'll see today is that those really weren't confirmed new highs, except for the NASDAQ. NASDAQ was still the top performer. It hit a new high several times during the week, but we also had new record highs in the Dow Jones, the NYSE, the S&P 500, the Dow Jones Transportation Index, and the NASDAQ 100. So last week was the best week of 2017, and now, of course, we're following it with the worst week of 2017. But despite yesterday's sell-off and today's sell-off, we still are on the bearish market call, which we went to bearish market posture on December 23rd of 2016. That was when the Dow was at 19,933. So the Dow's down about 120 points from where we went bearish. Last week we wrapped up with the CTI at minus 13. Momentum was neutral at -1. The sentiment index is bearish at -1. They may wonder how momentum actually went lower last week. That is because the Dow Jones actually outperformed most of the other indexes, and if we have that can signal momentum is a little bit negative. Internal breadth is still bullish. Indicators aren't really deteriorating too much. But between yesterday and today, we are starting to see some cracks in there that we'll go over real briefly. We also had VIX last week, I believe on Thursday, hit another multi-year low at around intraday. I think it was 1028. Last time it was there was around 2014, sometime during the summer, and we'll go over and look at that. We also had the percentage of bullish investment advisors become bearish for a 10th straight week. We'll take a look at that also again and kind of get started and see how some of the sentiment may play out going forward. All right, first of all, I want to look at the Dow Jones. If we're going to look at some of the places where, if it trades down to a certain level, you may want to take a little bit more of a defensive action. Right so far we've got so far off of the leading major averages. Here you can see the Dow is, I don't know, I didn't figure out the percentage of these things, but you usually don't see them this high. In the past, we've been able to go back, and I've told you you can always take your fingers and take a little check and say, well, how far was it from here to here with your thumb and index finger, then measure it over here to see how far it is. You'll find some real consistency in these things, that they usually don't get much further off of a moving average before they'll start to correct. And we're kind of don't have that really here, but we do probably off the 100-day moving average. But what I want to look at right now is, okay, the 50-day moving average is down here for the Dow Jones right around 19,669, which really coincides right with the pivot point over here. Now the pivot point we've talked about a couple times is actually where traders look to change positions. When the index or stock is trading above the pivot point, traders are looking to go long on pullbacks. Once it breaks below the pivot point, which in this case coincides almost exactly with the 50-day moving average, then traders are going to, on the floor, are going to start looking to see where they want to short it, and they'll look for rallies up too short, and they'll cover again once it goes above the pivot point. So we're not there yet, but if we can pull back here to the lows of January, we're going to get right into play with the 50-day and pivot point. So you want to keep an eye on that level. Now, if we put in the Fibonacci retracement levels, your major support is going to come down here around 19,241. Very, very possible, but you can see us here as we broke out to a new high. Here's the 14-day RSI. You can see the negative divergence. And what you want to see on here, in fact, we're almost ready to go below 50, right? So I did this morning. We're at about 53. You also have some negative divergence in the MACD. So this was an unconfirmed new high, and that's very important because this negative divergence is usually a signal of a top. Especially on the 14-day RSI, because this thing got to almost was overbought before we got to the thing. But if it breaks below 50, it's going to be pretty much. We could see some additional selling going on. And the stochastic down here, I'm using the 14-day today rather than the 30-day. You can see where it kind of gave a sell right over here on the first day of yesterday, pretty much, and we were overbought. So that's telling you we're due for a little bit more of a pullback in this case. The S&P 500 looks very similar. Okay, last week we broke out to this new high on, I think, on Wednesday. MACD showing negative divergence. RSI, again, showing negative divergence. We're still above 50. We're at 51 this morning. We may fall below that today, which would be a negative. But remember, when we talk about the 14-day RSI, you're not just looking at the overbought and oversold areas. What's important is while you're moving like this, moving sideways or slightly up, you want to make sure that 14-day RSI stays above 40. If it goes below 40, that's an indication that we may be in for another, the trend may be changing over the intermediate term. Okay, the pivot point on the S&P 500 is below the 50-day, which is at 2250. We're still at 2269 on the S&P. So, and we're not sitting here with raising red flags telling you to jump ship or anything. But just know that if we get down to the 2250 area, the pivot mark is around 2235. In that area, traders will start to get ready to see if we're going to break below there. And if we do, then they'll start to look to get short the index. But again, just notice that we do have the negative divergence coming in here right now. Not a crazy amount, but it is. The MACD is still bearish. The CCI is also coming in bearish. It's going below zero right now, and that's a negative factor. But until we break down below this 2250 area, 2255 on the S&P, you've got to have at least another day like today, if not more, before you even start to get to levels where things are picking up that you want to start thinking about getting out. The Nasdaq. Now this was a confirmed new high. You can see over here where we broke out to this new high. It ran into resistance level up here at this 5650 area. As far as looking at the 14-day RSI, you're still making a little bit higher highs. Had a pullback over here from an overbought area. Same with stochastic. Now, this one is the 30-day. You finally got a little bit of sell on. So this could actually come back down here to this what's R1, which is a resistance level based off the pivot point, right around 55.17. I think we got down to around 55.50 or so this morning. So again, it's not imminent that we're checking these support levels out. However, if we come into the play with the 50-day moving average at around 54.62, people start to look at that. If we go below 53.17 or so, that's the pivot point. That's where traders will begin to think about maybe shorting any advance. Plus, we had this longer-term trend line going back here to last February, which is still in play. That's all the way down here around 53.50, almost 53.25. So again, you've got a lot of downside before these things are starting to change out of their bullish trend. Okay, so it's not like you want to get out of these things, just some places where you may want to lighten up, and that's what we want to talk a little bit. Part of this also is when we look at the sectors, you'll see that the technology sector actually, I believe, had a confirmed new high last week, and it's still one of those places that you want to be going into the market. Okay. Last, but I do want to show you the last two, which actually are giving us a little bit of a red flag. This is the Russell 2000. we came into play today where it's bouncing around the 50-day moving average, which is right here at right around 1357. We're at 1350 right now, so we're trading below the 50-day moving average. That's a red flag because that also just happens to coincide, like the Dow, with the actual pivot point. So if the Russell starts to go much lower in here, you know, again, you look at the negative divergence going on here, and it's starting to break down. We're below 50 at 46 on the 14-day RSI. We want to see if that's going to fall below 40. Our CCI has already signaled that we're oversold in here, so you could get a little bit of sideways action. But we are, with the Russell pullback, it is a bit of a red flag. You always want to remember that, you know, we generally look, the small caps are generally going to lead the market down. They're also going to turn early and lead the market up. And this may be a little bit of a signal that if we start to break down too much further here, where we get the support down here around 40, around 13, that it could pull the rest of the market down. So this is one of the indexes that you want to see if we're able to bounce here. And there are a couple of good signs that I'll show you later on. And the other one is the Dow Jones Transports, which we waited for the breakout all along in here. We never really got it, but we finally had a breakout for that. And we actually had a double top here, possibly last week, which is a kind of a bearish topping pattern. We're down here today trading right around the 50-day moving average, which for the transports, which comes in at 91.70. Okay, we're below that right now, so we're at 91.53. So this is the second major average that's broken the 50-day moving average. That's something you want to watch. I think that we're okay until we break 9,000 on the transports. It's down 1.88% right now. So you still have another 150 points before you come down here and test this 9,000 area. That's where if it breaks below that, that's probably going to be, you know, somebody will be waving the flag there. Of course, the 14-day RSI, big negative divergence on this last move up. You can see over here we made a much lower high than we did, and we're actually below the 50-day. So the last two charts, you want to keep your eyes on the Dow Jones Transports and the Russell 2000. You know, if they start to break down much more from here, that could signal that we're in, you know, they may actually pull the other indexes down. So as far as the market, there are a couple other things I wanted to point out. I heard this morning we've gone 75 days now without a 1% correction. And that's the longest period in 11 years. So that goes back to 2006, where it's been since we had an actual 1% correction in the S&P 500. And that was another thing that we want to talk about is some historical data. It's since 1977, after a presidential election, the Dow Jones has averaged a 1.89% decline in February. So there is some historical credence to support that we could have a little bit more of a pullback in the broader index to go along with our negative CTI. Okay. As far as the CTI goes, I told you it will still be a minus 13 this Friday, and I'll be looking to reset the cycles somewhere around that point. However, one thing to explain, I'll explain it more in the Friday market letter and also on the edge this week. If the week following this week we make a lower low in the Dow Jones, let's just say the low this week is 19.8. If we go down to 19.795 next week, that will extend the cycles out for a minimum of at least one more week. We also want to see the momentum index begin to show some signs of life. So that breaks down at the end of the week, which it probably will, and we see another new low, intraday low, not just on a closing low. Then that will extend the sell cycle for additional week or two. And if the market stair steps lower over a longer period of time, because of that discipline and that role, that could keep you on the sidelines or on a bearish market posture for 4 or 5 weeks if that's what happens with the market. So keep that in mind. Just because we're scheduled or projected to flip the cycles to bullish at the end of the next week, not this week, that it may not happen, and I would still doubt that that's going to happen. Okay, the email went out that we were going to talk a little bit about sentiment indicators. So I'm going to touch base on some of these because we did look at these last week. First is the VIX, which we saw last week. We saw it come down here and actually touch around 1025, 1028. Last time we did that was back in the summer of 2014. Right around here, we had in August. Shortly after that, we ran into a 5% correction, and then as soon as the VIX started to move up a little bit, we also had a 7% correction in here. So we are at an area with the VIX where you can start to see some some correction, or people the traders are a little bit too complacent. They call this the fear factor, but basically what it's tracking is how much premium there are on the options for you to buy protection to the downside, or if the market's going to experience heavier volatility, and people want to play that volatility to protect their portfolios. The VIX will start to go up to make it more expensive because they don't want you to make any money. So even though today, I mean, we're down 150 points, and the VIX is only up 80 cents. So we're at 1273 up here today, and that's still historically pretty low, and it's showing the traders aren't too worried about volatility. But you can also look at the different indicators on these, and as we cross above 50, that could show you the volatility is going to pick up, and the indicators will perform like they do on a stock or an index. MACD starts to go up. That means that perhaps you're starting to get a little bit more of a trend in the VIX. So keep an eye on that. If we get a bump up here to the 15 or 16 or above 16, we could get another run up to in the 20s, and that would mean we're in the process of getting a little bit more bearish on this. This chart, I felt I took it out. This is a way that you play. This is another VIX chart. I'm not sure how that stayed in there. It's from last week. Okay, next I want to show you this. We looked at this last week. This is the percentage of bullish investment advisors. Anything above 55 triggers a red flag, and it means that the investors are too bullish. The reason this is a bullish, it's the contrarian indicator, is because once these guys all get too bullish, it means they're fully invested, and then there's no more money to come in off the sidelines to push the market higher. This thing also runs about a week late, so we'll get the new numbers tomorrow, and I would be surprised with the market making out the new highs if we're not above 60. Above 60 is a red flag. We were at 58.5, I think, last week. So if we're at 60 tomorrow, that's coming right in on schedule, seeing the where we're at correction levels on that indicator. That's for sentiment. And also, anything below 20 is a bearish. It means that they're not bearish enough. In this case, you don't have any bears out there. So below about 1920, that signals that everybody's got money to work in the market. So no one's shorting the market at this stage. That's another contrarian indicator that you want to we could be in trouble. Anything below this level, and you can see it's been a long time. The people just aren't worried about any type of correction at this time. And when everybody's on one side of the trade, that's always a bad thing. Okay, we looked at this last week also, another sentiment indicator, and actually this has a little bit of momentum too. This is when we were looking at new highs here about a week and a half ago, and now you can see over here in the NYSE. Yesterday we came close to almost having more new lows and highs. Same thing with the NASDAQ. I think there were only about 4 or 5 more new highs yesterday than new lows. Today it's actually a little bit better because you're getting some bit of a bounce back in the pharmaceuticals and a little bit in the biotechs, but we'll look at that later. But once this thing crosses, like back over in here, this was before the election. You can see it's a bearish indicator. It means sentiment is changing. All right. I do want to check on the different sectors because we have not looked at these for a while. A couple surprises in these, in places where you would not expect to be going. But some of the strongest ones currently, consumer discretion. XLY is a symbol on this thing. You have a nice upward trend line. You made a new high last week. I would say I'd be really kind of kicking my way if I was going to say this is negative divergence in the XLY. you don't want to make these things, you can always find an indicator to agree with you. I would say this, I wouldn't really point to this as negative divergence. It's close enough that you almost made the new highs over here on this surge. But there is a little bit of indicator negative divergence down here, especially on the MACD. But I think on the consumer discretionary, which would be some of the, not necessarily retail stocks, but maybe just some of the things like the Costco's, maybe some of the Netflix or some of these things that you may want to look at as far as buying on pullbacks. You could get a pullback in this thing down here to the 50-day moving average down around 83. The pivot points all the way down here to 82. So you got a long way to pull back on some of these retail stocks and stuff. Not the brick and mortar, but some of the like the Home and Depots, that kind of stuff. They're more the specialty retailers. They still look in pretty good shape. They're overextended, but I think you can buy some of these things if we come down here and test this 50-day and the pivot point on those things. Okay, the next one is the financial sector, which has had a heck of a run. I think this is probably either the leader or the second leader. But, okay, we made a new high over here last week on Monday or Tuesday. But look at the 14-day RSI. This is not confirming this breakout. In other words, you were rolling over, you got a little pop, but the 14-day didn't confirm it. Now you've got a sell on an overbought from over here. And you also have negative divergence on the MACD. I'm not telling you to go out and buy the financials because in a rising rate environment, I think you can, what you want to do if you want to sell some covered calls over here to lock some premium in, or if you come down here, break below the 50-day, you might get a chance to maybe buy some of the better acting banks or regional banks or insurance companies down in this area. But I wouldn't be looking to buy them. Put new money at them right in here. I think if you have some new money, you can come down here and look at around 2250. And I think this is an area where you want to be in later on in the year. I wouldn't be buying the banks quite yet. I'd be looking for a pullback in that area. Okay, the other one I still like, you're still in a pretty well-defined upward channel. You are at the upper limits on this thing, so this is due for a bit of a pullback with the broader market. You're well off the 50-day moving average, but look at this on the 14-day RSI. When you're having this making new highs, and you're seeing the 14-day RSI making higher lows, this is a good thing. Now, if we do pull back in here with the semiconductors, because they just had a heck of a run, I didn't put the socks on here, but I think you can probably break this for a little bit. I wouldn't be adding new money to technology right here, but I certainly would buy if we get a pullback down here to the 50-day, the pivot level, somewhere in this area. I think you have your stocks ready to buy at that level. We got some big name, big cap tech names coming out this week. I think Facebook, Apple tonight, Facebook tomorrow. That could affect this thing, especially the NASDAQ 100. I wouldn't put new money up here, but once we get down to this area, you want to own the technology stocks. It's just that, like I said, I think it's a little bit extended, and you have a overbought sell rating on this, and with the broader market still looking, a little bit weak, I wouldn't be buying in here. Okay, next we have the industrial sector. Again, negative divergence. You break out to a new high last week, not confirmed by the 14-day RSI, not confirmed by the MACD. In fact, it's given another sell signal, and you're also not confirmed by the stochastics, and you're on a sell here. I would not be looking to buy here. You can come down here and test this 50-day in the pivot point for the industrials. But to me, I still wonder how some of these multinationals are going to be affected by Trump's policies. And this wouldn't be my favorite sector to be looking to buy. Maybe if you got some industrials that are here and that do most of their business in the U.S. that are maybe going to participate in building out the infrastructure, that type of thing. I would look at those, not the ones that are going multinationals on that area. Okay, here's the materials. If either this is the leader or the financials, I'm not sure. Again, you have I'm really stretching it to find any negative divergence in this thing. So I do like this sector. I wouldn't buy it right here. I would look to see if maybe we can get a pullback to the 50-day or the pivot point down here around $50 or so. That would represent a maybe 3 or 4% pullback with the broader market. but this is an area that I think you want to be buying on any type of pullback. It's still with Trump's policies, I think you'll get a bump up in here. Yeah, once in a while when you see a gap like you have over here, there's always the risk that this thing will come back and fill that gap. Now, yesterday and today on the indexes from last week, when you saw them break out the new highs, we've filled the gap on the different indexes. So that's also a thing until it gets back above that gap from last week. You're still on the defensive on the different indexes. Okay, a little bit of a surprise here. Now this is the energy. People talking about it. They're thinking oil is going to go higher. I've been telling you I don't think so. I think 55, maybe 58 would be the top on this thing. We broke through the 50-day moving average last week. We're down here now testing the 100-day moving average. You've got downward trend line resistance over here. The 14-day RSI has already broken below 40, which is telling you that we're in a bearish intermediate trend on energy right now. And you may have some you have some more downside. You do have a trend line down here around 70, but that's still, about 3.5–4% downside from here. I look for, for the crude oil prices to probably, trade somewhere around this 50. You may get down to 48. That's bearish for the energy sector. And I think, the reasons for that is OPEC kind of bit themselves in the foot where they wanted to keep oil around 55, maybe even 60. But at those levels, U.S. rigs come on board, and that again, we start to get into an oversupply with oil. Unless the economy picks up to the point where we need more oil now, you're not going to see a big bounce in this thing. If you've got some longer term things on here, I wouldn't maybe sell some covered calls. I had some energy stocks that I've been getting out of right in here because you had this little bit of a descending triangle here you could take, which you broke to the downside. This resolved lower. I think you could probably still see some more downside, especially if oil comes down here and tests this $50 range. So a little bit of trouble in here, and you're below the pivot point. So again, when we talk about the pivot point, traders are looking to short energy and crude oil prices on any rise. Now, what I do kind of like, and this is surprising because you're here, especially with Trump today, talking about he wants the drug prices to go down, but he actually did something pretty nice, which Hillary didn't do, and that is I'm going to try to make it easier for you to get your drugs through, but you've got to work with us to get them down. Okay, we talk about negative divergence all the time, but we're having a little bit of a move up here. This, when you see this thing making lower or higher lows and making higher highs, okay, this is positive divergence on this now. Now you also have the MACD coming in here. You have an overbought condition on the from this pullback in here on the stochastics, and you also have this breakout from this triangle pattern in the healthcare sector, and you've come down to test it, and it held support just right above that pivot level. I would look to. I think you can probably check out some of the pharmaceuticals today. They're not exactly my favorite. I like the biotechs more, which I'll show you. But again, you have a market sell-off. Pharmaceuticals are up today, and so is biotech. So to me, if you're looking to put some money to work in here, I would keep an eye on this. But also remember, this is a defensive sector, along with consumer staples and utilities, and a market pullback. You would probably not get hurt too much buying some of the healthcare stocks. Now over here's the IBB, which is the iShares NASDAQ Biotech ETF. Again, you have like a little bit of a rising trend line here. Here's you're kind of going into a triangle pattern where if we can break above this thing over the next few weeks, that's bullish. Again, we talk about negative divergence. This is bullish divergence. You got this thing going, you got a lower high, but you're making higher lows. And the RSI is picking up. You also had this thing on this last sell-off, did not get into oversold area, and you're starting to get a buy on that. MACD is also giving you a buy signal. It might be time to start looking at some of the biotech stocks that have really just gotten clobbered. They've bounced back. They've gotten clobbered again over here. Biotech ETF today is up almost 1%. So this might be a time for you to where the Trump's administration may not be as unfriendly to this sector as you think. It might be a time to look at them. I would look for the biotechs. If you see the IBB getting up over this 275, 277, 280, that's a good signal. You're breaking through this resistance here at the R1, and I think that would be a signal that you're going to also cross above some of these major moving averages that you want to look at. I'm kind of running out of time. I want to get to a couple questions. Here's another one that I like. We haven't liked this all summer long because of the rising rates. Okay, now all of a sudden you have the consumer staples look pretty good here. What we have here, we have the positive divergence where this thing kind of still was working on its way down, and now we have it breaking out of this triangle pattern. We just crossed above the 200-day moving average. Came off a little bit last week when the other indexes were making a new high, but now we're working our way up again, and I think we're positive today. Let's see. Yeah, XLP is up about 0.25% today, along with healthcare's up 0.65%. The REITs are up 1.18%. Utilities are up 1.5%. So the defensive sectors, despite the sell-off in the broader market, are looking fairly good in here. Now, whether that's a lot of different things can cause that. If the FOMC meeting wraps up tomorrow afternoon, maybe Yellen comes out and says this growth is slowing. We're going to leave rates where they are a little bit. At this stage of the game, whereas before that would be bullish for the market. Now that we're using growth-oriented policies, when you have the market slowing, you're not going to raise rates. That will become a negative going forward here, rather than the positive that's been for the last year. That's not going to prop the market up. If we're having slowing, if we're trying to get more growth policies coming in where we're going to have to spend more money, the lower rates isn't a bullish sign for that. But again, you have some positive divergence in the consumer staples group, so you want to take a look at that. These could be the Kimberly-Clarks, maybe the Procter & Gamble's, that type of stock. You're getting a decent dividend on those, and they've had a nice, good 6-month pullback, and they're coming out of this bottoming over here. And I think this is an area also that you could look to buy a few stocks. So I'm going to wrap it up with that and try to get to a couple of questions. If you have some more questions, please feel free to fill them up. But as far as what I'm looking at going forward here, we are still bearish on the market. I think this thing is going to go a couple more weeks. It could go 2 or 3 more weeks where we trade sideways to down. Keep watching, looking at the Friday market letter, and we'll let you know. But you just on your own, get your paper out and just mark this week's low in the Dow Jones and keep it. And then next week, while you're watching the trades, if you see intraday where the Dow Jones broke below a certain low this week, then you know the bearish cycles are going to get extended out. And you can do that and go forward, and you can come back to the Friday market letter and see where we are. Okay, 2 questions that have come in. I don't think I need to go into share this charts yet. One said, is it too late to sell the financials? No, I don't think so. I think your financials are good. If you bottom over in here and you got a great you got a hell of a profit in this thing, maybe you stream off a little bit, but only if you're trading on the shorter term. Now, this could come back down in here, give up a bit of your profit. But I think in the longer term, you're probably going to want to hold those. If I was trading, I probably would have, I might have even come out over here and missed this last little bit. But once we break this pivot in the 50-day, which coincides with the same number here, you may get more of a pullback down here. With the broader market sells off, you could get down here to the 100-day moving average. And the financials have really supported this last run up. If they would begin to start to break down more because the yield curve flattens out, or Yellen again says that we're not going to we're going to leave rates lower because we don't growth is slowing, then that would be a signal that these may pull back again, and that would hurt the broader market and probably induce the whole market to sell a little bit more. Okay, somebody else wants to talk about the pivot points. You've noticed I've been using John Murphy's charts from stock charts for the last couple of weeks. We're in the process of rolling out, getting rid of smart charts And our new site, every week we keep telling you it's going to be another 2 weeks. But the new charting package will have the pivot points and the resistance and support R1s and R2s on it. They're good things to keep an eye on because, like I say, when traders come into the market, they follow the pivot points. They used to do it on paper every day, but you can now get the charts to do it. When the index or stock is trading above or below the pivot point, when it's above the pivot point, you're looking to short at these resistance levels up here. When it comes down here, they're trying to buy it when it comes down here, and they short it up here. On the other side, they're going to buy at these support levels and try to short up to the pivot point. So that's how they trade off of these things. They're more or less for the not just a day trader, but maybe for some swing traders. If you're looking out, you go 2 or 3 weeks, you can look at these things going forward for a while. You can actually stretch these things out to make them even longer. But these are things, again, that with the negative divergence on the financials, I think you probably have more risk to the downside right now than for this thing to catch base at the 50-day and start moving the new highs. So if you're going to sell them, depends on your time horizon. But I would also be looking to buy back here, maybe. If I want to hold for the long term, if I'm a long-term investor, maybe I look to buy, add to my positions down here, and knowing that maybe we'll get a little bit more of a bump. I don't see any more questions coming in. Linda has GS, Goldman Sachs. Okay, I can. Let's take a look at Goldman Sachs here. I'm going to try to see if I can share this. Since I'm going to share the screen, if you have some other stocks you want to look at, let me know. I'll pull this up real quick. That didn't work. Let's see here. Okay, now I'm going to share. Shoot. Let me get in here real quick. Okay, here's Goldman Sachs. Okay, this includes today's action. Okay, we came up, we went below that, went above last week on the breakout, above the pivot point, bounced off the 50-day a couple of times. Today we're below the 50-day. We're also below the pivot point. So am I looking to buy here? No. And also besides that, look at this negative divergence in here. We're over here trying to hit new highs, and this thing's down here at 40. Not quite oversold even yet. And today we are on Goldman Sachs at it's down $5, down another 2% on this thing over here. So support's going to be around 224. We're at 228 now. Break below that, and you're probably going to go down here to support around 209 on Goldman Sachs. I don't see anything in here that's telling me to buy this thing at this stage. So I would be, maybe down here I'm ready to go. But this kind of looks like it's got a little bit spin after this move from the end of September all the way up to there. That's 150 to 250. Hell, that's you're up what 45% or something like that on Goldman Sachs in about 4 months. I think you're probably extended on this thing, and you have a real possibility of this thing coming down to this, the low 200s anyway. Okay, let me see. Anything else here? KBE. Okay, we'll do that. Okay, this is the regional bank. I think this KRE is the regional bank. This may be all of them. Okay, we're sitting here bouncing off the 50-day on the way up. The 50-day and the pivot point are right together. This thing breaks below this 42.86. Again, look at the negative divergence. You broke out to a high last Thursday, something like that. Boom, and you got the 14-day RSI barely staying above 50. That's negative divergence. If I'm in this over here, I'm probably gonna come out of it and wait to see if I can get back in here or see if we get a turnaround down in here. But on the other side, this thing, especially if it falls below 40 on the KBE, that would tell you that you have some more downside. But you know, right now you're right on the break point where if this thing starts to go in here, you're probably going to see more weakness, especially if you take out this low from early January, early to mid January. If you take that out, that would signal that you're probably going to get even lower. But I would watch this 42.86 and watch the 50-day, and then keep an eye on that low point from early January. If it takes that out, then yeah, you probably don't want to be in that for a little bit. Okay, boom, boom, boom. Okay, that's all I see right now, and I've gone over 40 minutes, so I want to stop this thing. I appreciate you joining me. If you have any questions during the week, or you have any questions on what we talked about today, you can send me an email to the doc@marketedge.com. Again, kind of be, we're still bearish for a while, even though today's action is, we're down about 140%, and the transports are bad. The Russell is actually showing some relative strength today, which is good. And as far as the advance and decline issues are going, they're about flat. So I think what you'll probably see this afternoon is you'll probably see some end of the month window dressing. It's probably going to bring the different indexes well off the lows. So there might be a chance on some things to, if you've got something here, you might be able to trade it to the upside for the rest of the day. But thanks again for joining me, and we'll see you next Tuesday.